everyone, welcome to my channel. Don't forget to like, comment, and subscribe. Consumers consider insurers main providers of wellness information. Customers consider insurers as among the top preferred providers for physical and financial wellness advice. According to the World Life and Health Insurance Report published by Capgemini and Chorus. However, most insurers don't focus on engaging with customers and educating them on how to adopt and consistently use wellness solutions. Wellness as a Service offer a model for life and health insurers seeking to keep up with evolving consumers' needs, the report said. The report provides insight into customer preference and strategies for insurers to provide wellness as a service in individual and group lines. As like expectation, C, increase and challenges like demographic trends, the retirement savings gap, medical inflation, and shortfall of healthcare workers grow, wellness is at the forefront of customers' mind. The report found that 69% and 67% of customers are interested in physical and financial wellness, respectively, while 37% and 24% of policyholders rate insurers as their top potential partners for physical and financial wellness, respectively. The report found that 83% of customers are looking for an on-demand customer services, 78% for ongoing physical and financial guidance, and 74% for hyper-personalized value-added services and reward. However, only 8% of insurers have established effective wellness-centric value propositions and built the capabilities necessary to sustain them. The report found that insurtech are ahead of traditional insurers in the capabilities for hyper-personalization, specifically artificial intelligence or machine learning and cloud. Insurtech and traditional insurers are largely aligned on product innovation. However, only 43% of insurers are effectively co-creating or innovating with strategic or ecosystem partners. The last 2 years prove that wellness needs to be a priority, and insurers need to understand how to effectively deliver wellness services, said Samantha Cole, Global Life Annuity and Health Insurance Sector Leader at Capgemini. This report demonstrates the need for insurers to transform and focus on hyper-personalized services that meet individual needs of customers. This means moving to a data-driven, wellness as a service model with the technological innovation that prioritizes the customer. This, in turn, will enable deeper engagement and help insurers reach out to customers as and when they need it most. The report said that in order to meet new customer expectations about physical and financial wellness, insurers should focus on 3 priorities. Number 1, insurers can help policyholders rebuild their physical wellness by accessing emergency and regular Medicare, and their financial wellness by meeting current financial needs. And number 2, insurers can support policyholders to prevent future physical wellness issues by ensuring adherence to medical prescription, physical therapy protocols, or routine wellness visit. They can prevent financial challenges by helping customers prepare for unexpected expenses or educating them about income protection products. And number 3, insurers can help policyholders improve physical wellness through ongoing health and life advice, and financial wellness by providing better financial planning option opportunities and education. Over the past few years, we have seen our insurer partners innovate and evolve to a prevention mindset for the benefit of all parties, said John Perry, CEO of Chorus. Indeed, Customers engage better with insurers who genuinely care about their well-being. Insurer and governmental organizations see the benefits from certain recovery times and health issues that have been facilitated by the technological advances that allow better follow-up and support for all. Thanks for watching, see you in the next video, and bye-bye! Hello everyone, welcome to my channel. Don't forget to like, comment, and subscribe. Obstacles to insurance business growth in the new year. New Year's Day is a fresh start on the hand. It's a time to look ahead with an appreciation for what will come. It's a time for those rose-colored glasses, the hope for your goals and plans for your future of opportunity. If you work in insurance, thought you might also see January 1st as the start of a dead zone. December, because it's at the end of the year, is often flush with sales. Number 1, you have had a whole year of marketing to build that sales funnel. Number 2, the end of year has a special pressure for sales. Number 3, clients know the end of year is also the best time to get in last minute business for a favorable tax situation. For a myriad of reasons, December seemed to have the effect of everyone opening their pocketbooks. So, January can leave over offices really feeling like everyone is suddenly sticking to their New Year's resolution of temperance and budget conscientiousness. Keep your funnel filled. Particularly for those whose livelihoods rely on commissions, the obvious answer is to avoid sprinting through December only to flag in January. Instead, while your December may always be fast-paced, treat January as the start of a marathon. Take it at an even pace and understand that your January 2022 will determine your December 2022. Part of overcoming the January blues is in understanding that even if it's not your highest sales month, it's a key month for planning and for early execution, so please do yourself a favor and don't snooze through it. Overcome obstacles to meet your 2022 goals. Every year has its particular challenges, and 2022 is going to be no exception. We've outlined some of the chief challenges to growth insurance stakeholders may face in coming months and ways to overcome them. Number 1, growing with a target and on your back. The big names that are making noise with mergers and acquisitions or with big growth announcements get noticed. And there's no way to get noticed by prospective partners or others in this industry without also attracting notice from regulators. And then number 2, staying on top of inflation. If there's a buzzword for 2022 the financial sector, it's probably inflation. After decades of historically low inflation rates, we've seen the ticker start to jump. For insurance pros, that has a few implications. Rising costs in hiring and maintaining staff and other business expenses. Dilution of current reserves. Increased customers' appetite for rising coverage limits. Number 3, onboarding and agent experience. We have said it before and will say it again. Agent experience is everything. Producers are the rock stars of the industry. With no sales, there's no sales. And no matter how much we point to automation and technology that makes it easier to go straight from carrier to customer, even digital natives want to able to talk to real people when it comes to complex life-impacting decisions like insurance. And then number 4, finding the right people. While the industry may see a wave of new agents, finding experienced operations and administrative personnel is only going to be harder this year. Early retirements women existing the workforce and a historical lack of interest in younger generation paint a picture of an industry that is beginning to struggle to employ people with the knowledge and experience that make the backbone of the business. Number 5, Risk of a compliancy in any year. The risk of compliancy can sabotage your January. In 2022, with pandemic fallout still looming and further regulatory changes on the horizon, complacency spells doom. This year belongs to those carriers, MGS, and agencies that can be quick and reactive, that take a forward approach to following regulation, and that are magnanimous in their service to agents and consumers alike. Thanks for watching. See you in the next video, and bye bye.